Hi, I'm Steve, and welcome to Boosting Your Financial IQ. On this channel, I help people to increase their financial intelligence so they can live better, more abundant financial lives. In this video, I'm going to show you how a statement of cash flow works in 5 minutes. So let's do this. Welcome to the statement of cash flows. This is probably the most important financial statement, but it's also the most neglected as well. We are going to be looking at Home Depot today, and I'm going to walk you through the 3 sections that make up the statement of cash flows. First, before we get started, keep in mind that these numbers are expressed in millions of dollars. Each of these columns also represent 12 months of activity. Here's the interesting thing. For Home Depot, their fiscal year is between February and January. That's why it says 12 months into January. Most companies have a calendar year that goes from January through December, but obviously Home Depot has made the election to have a different fiscal reporting year. Okay, so let's begin by looking at the 3 sections. There are operating activities, investing activities, and financing activities within a statement of cash flows. What we need to start with first is net earnings. Net earnings ties back to the income statement. So if we look at Home Depot's income statement, you notice here 17,105, 16,433, 12,866. Those all tie right here, and they're brought over from the income statement, and that's how a statement of cash flows begins. Now, here's one thing to know. A statement of cash flows is like the income statement and the balance sheet had a baby, and the statement of cash flows is their baby. It's a combination of those 2 financial statements into one, so you can determine where cash is flowing in and flowing out of the business. So we start with net earnings. Then we have to add back depreciation and amortization. Remember, when you buy property, plant, and equipment, you can't just write off the whole thing in a given year. You have to depreciate it over a period of time. You depreciate tangible assets, you amortize intangible assets. This line item right here is added back because it's not a true cash outflow. Instead, it's just an expense that is deducted from a company's net income in order for them to pay taxes. So we're going to add it back because we're trying to get to cash flow, and this is not a cash activity. Then we look at other things like stock-based compensation expense. This is not a cash outflow, so we got to add that back. Then you have changes on the balance sheet, changes in assets and liabilities. So think about it like this. When assets go up, a company has less cash. In other words, let's just say customers owe Home Depot money. Okay, those are their receivables. If receivables go up, it means customers owe Home Depot more money because customers are sitting on the cash, not Home Depot. So you have to account for these things. Now, liabilities, as liabilities go down, the company has less cash as well. Think about it like this. If Home Depot has a balance with a trade vendor and then they pay that bill and that balance goes down, the company is using cash to pay that off, so it has less cash. So when assets go up, a company has less cash. When liabilities go down, the company has less cash. All those changes right here are reflected in changes in working capital. And then you add all these things together and you end up with cash provided by operating activities. This is the amount of cash that the company earns from its normal operations. All right. Then in the investing activity section, you have capital expenditures. So when a company goes out and buys property, plant, or equipment, they spend cash to buy tractors and machinery or land or whatever it may be. Those are considered capital expenditures, and those outflows are recorded here. Also, the company may use cash to make other investments, or it may receive cash if it sells some of those investments. So all those activities are recorded here in investing activities. You have a sum total right there. And then finally, in financing activities, just think of it like this. If a company goes out there and acquires debt, if they take on more debt, they're getting cash or a cash benefit by using that debt. To the contrary, if it pays down its debt, cash is going to be flowing out of the business. If a company raises cash from investors or pays dividends or distributions out to those investors, those inflows and outflows are recorded in financing activities. So anything related with acquiring debt or paying down debt or getting money from investors or paying investors cash through dividends or distributions, all those activities are recorded here in financing activities. Okay, so you have these 3 sections. These are the changes in cash based on operations, investing activities, or financing activities. You add those 3 things together and you get the change in cash and cash equivalents. You make some other adjustments. So for example, Home Depot is operating in different companies. So there's the effect of foreign exchange rates on their cash. So you account for that. Then you take the cash at the beginning of the year, you add these two things together, and you end up with cash at the end of the year. So here's the beauty in all of this. See this line item right here, cash and cash equivalents at the end of the year? This should tie back to the balance sheet, 2757 and 2343 in 2023 and 2022, respectively. You go 2757 and 2343. Bam. That's how the statement of cash flows ties back to the balance sheet and the income statement. In addition to these things, companies often make supplemental disclosures, cash that is paid for income taxes or other items. Those things are listed down here, but ultimately the statement of cash flows is broken down into those three sections: cash provided by operating activities, investing activities, and financing activities. And it's really important to understand how cash is flowing in and out of a business. I hope you got a lot of value out of that video. And if you did, make sure you hit that subscribe button so you get notified every time I drop a new video just like this one. Also, you can find a lot of great resources on our website at byfiq.com. And if you haven't already, make sure you download our free Boosting Your Financial IQ app. You can find that on the Apple app or Google Play Store. Also, make sure you check out this next video where I talk about how to analyze the statement of cash flows. Cheers.